Autonomous ride-hailing is revolutionizing point-to-point transportation by dramatically reducing costs and increasing convenience. When adjusted for inflation, the cost of owning and operating a personal vehicle has remained relatively unchanged since the early 20th century. However, it is projected that autonomous taxis at scale could slash consumer costs to as little as 25 cents per mile by 2030. Historically, the cost per mile of a personally owned vehicle has seen minimal fluctuations, from $1.70 in 1871 with horse-drawn carriages down to 70 cents in the 1930s and beyond with the advent of cars. This cost stability persisted even as technology advanced. But now the potential shift to autonomous ride-hailing presents a significant departure from this trend, promising unprecedented affordability. Imagine accessing a ride that costs a fraction of what you're used to paying. The economic implications are profound. Could autonomous ride-hailing be the next major investment opportunity in transportation? How will it reshape our cities and daily commutes? This video will look into the potential of robotaxis and explore their promise as a groundbreaking investment in the future of mobility. Robotaxis are rapidly gaining traction, with operations expanding across approximately 20 cities worldwide. By late last year, the annualized rate of robotaxi passenger trips reached around 2 million, highlighting the significant strides made in this sector. Baidu stands out with a run rate of 1.6 million autonomous trips in 2023, tripling the figures of Waymo. Notably, Cruise has ceased its U.S. operations, but the competition remains fierce. Tesla, with access to 50 times more driving data than Baidu and 280 times more than Waymo, holds a massive data advantage as it prepares to launch its own robotaxi service, which promises to be the largest AI project in the world. Tesla's extensive data collection gives it a significant edge, achieving an impressive 700 million miles annualized run rate compared to the much smaller figures for Baidu and Waymo. This vast amount of data is crucial for refining AI algorithms and enhancing the safety and efficiency of autonomous vehicles. Autonomous vehicles are proving to be significantly safer than human-driven vehicles. According to ARC's estimates from 2015, the accident rate for autonomous vehicles was projected to be about 80% lower than that for human drivers, potentially reducing the approximately 40,000 auto-related fatalities annually in the U.S. and 1.35 million globally. Current data strongly supports these initial projections. The chart highlights the remarkable safety performance of Tesla's full self-driving FSD mode. In 2023, Tesla in FSD mode achieved an impressive 3.2 million miles between crashes on surface streets, which is roughly 5 times safer than a manually driven Tesla, averaging 588,000 miles between crashes in 2022. Compared to the national average of 192,000 miles, Tesla's FSD mode is approximately 16 times safer. Waymo's autonomous vehicles also demonstrate enhanced safety, with around 476,000 miles between crashes, making them 2 to 3 times safer than the national average. In contrast, Cruise, which has faced regulatory setbacks, shows a significantly lower performance with only 43,000 miles between crashes. If you're interested in having instant alerts on popular robotaxi stocks such as Tesla, Baidu, or Waymo, check out our app Stock Alarm at the link in the description. You can create custom alerts such as push notifications, texts, or calls on a variety of market triggers like price limits, price changes, recurring price alerts, trailing stop losses, volume spikes, 52-week highs, and earnings. Autonomous electric transport is set to deliver substantial public health benefits by significantly reducing vehicle emissions. Air pollution from gas-powered passenger vehicles is currently associated with approximately 9,700 deaths annually in the United States. However, according to ARC's research, the widespread adoption of autonomous electric vehicles could prevent around 10,000 deaths per year by 2030. The bar chart illustrates the incremental lives saved in the U.S. each year due to lower emissions from electric and autonomous vehicles. Starting with a modest impact in 2024, the number of lives saved grows steadily, reaching 4,000 by 2026. This trend continues with the annual lives saved stabilizing at around 10,000 from 2027 onward. The transition to these technologies not only promises enhanced safety on the roads, but also a significant reduction in pollution-related mortality. The rapid advancements in large language models, LLMs, and generative AI are set to significantly accelerate progress in robotics. Trained by GPT-4 to perform various robotic tasks, a neural network has demonstrated superior performance compared to human expert coders on 83% of tasks, with an average improvement margin of 52%. The bar chart illustrates how LLM-driven reinforcement learning outperforms expert human coders across different robotics tasks, environments, and morphologies. Tasks range from simple actions like opening a cabinet door, task 1, to more complex maneuvers such as balancing a pole upright on a cart, task 8. For most tasks, AI systems, especially those leveraging Eureka, a reward design system with minimal input, and L2R, manual reward templates, have achieved higher normalized scores compared to human experts. At just 25 cents per mile, autonomous ride-hailing could unlock an enormous $11 trillion addressable market, serving a far broader population than current human-driven services. The chart breaks down this potential market by different price points and distances traveled. $4 per mile, a $34 billion existing market in Western regions where ride-hail services are priced between $2 to $4 per mile. $1 per mile, an additional $1 trillion addressable market in Western regions. 60 cents per mile represents $2.4 trillion in non-commuting miles in higher-income countries. 50 cents per mile accounts for $2.75 trillion from demand in lower-income countries. 25 cents per mile, the largest segment, with $5 trillion potential from low-cost autonomous travel. Platforms that facilitate the first 50% of urban autonomous miles are expected to generate the majority of earnings. The chart shows the relationship between the penetration of urban autonomous miles and the share of earnings for autonomous platforms. At 10% penetration, platforms capture around 10% of the earnings potential. By 30% penetration, platforms generate roughly 40% of the earnings. And at 50% penetration, platforms secure about 70% of the earnings potential. This indicates that early adoption and scaling of autonomous urban miles will be highly lucrative for the platforms involved. As penetration increases, the bulk of earnings will be concentrated in the initial stages of widespread adoption. The adoption of autonomous electric vehicles, EVs, could significantly disrupt the U.S. auto loan industry. Over the past 3 years, rising interest rates have increased new vehicle monthly car loan payments by approximately 27%, from $581 to $739. Consequently, the number of subprime auto loans delinquent by 60-plus days has recently reached an all-time high. According to Wright's Law, EV prices should continue to fall, shifting more miles onto electric platforms and reducing the value of gas-powered vehicles. This transition puts the about $1.6 trillion in auto loans currently held on financial institution balance sheets, mostly issued for gas-powered vehicles, at risk over the next decade. By 2030, autonomous platform providers could create an astonishing $28 trillion in enterprise value, which is about 9 times the value of all auto manufacturers in 2023. This growth is based on an estimated 15x EBIT, earnings before interest and taxes, multiple. In 2023, auto manufacturers had a revenue of $2.75 trillion, an EBIT of $200 billion, and an enterprise value of $3.1 trillion. In contrast, projections for 2030 show that autonomous platform providers, fleet owners, and autonomous electric auto manufacturers will significantly surpass these figures. For 2030, autonomous platform providers are expected to generate $3.8 trillion in revenue, $1.9 trillion in EBIT, and $28.1 trillion in enterprise value. Fleet owners are projected to achieve $3.2 trillion in revenue, $300 billion in EBIT, and $1.9 trillion in enterprise value. Autonomous electric auto manufacturers are estimated to have $900 billion in revenue, $100 billion in EBIT, and $1.4 trillion in enterprise value. Finally, we would like to thank the ARK Invest team for the hard work behind this research and analysis. You can find links to both Stock Alarm and ARK Invest at the links in the description.